Hi crypto fans, welcome to CCS Cryptocurrency State. My name is Santiago, I'm a web developer and investor, and in today's video I'm going to show you something very special, because you are probably wondering if the bull run is over or will continue, and instead of lose time in charts of 1 hour or 4 hours, you need to see this Bitcoin chart that I will be showing you. Because I will be doing a comparison between the bull run of 2013 and the current bull run and where we are exactly right now, and why I am saying that we are doing exactly the same things that we did in that bull run. And most important, I will tell you what exact things you need to be checking right now in order to say if the bull run is over or if we are going to continue and have one more leg up to the thousands of dollars on Bitcoin. It's very important that you see the whole video. If you are already a subscriber, I tell you, see the complete video. And if it's your first time here, you will want to be subscribed after what I have to show you here. Before we begin, please like the video, subscribe to the channel, click the bell to get the notifications, and remember to join the giveaway. I am giving money, half of the Bitcoin and 5 Ethereum, so go to the link in the description. Without anything else, let's go into it. Hey guys, well, I did this Excel file where I show the different things that I am seeing in the chart between the bull run of 2013 and the bull run that we are doing right now. And I will share this at the end of the video with my conclusions. But first, I will show you everything here in the chart. Basically, I am seeing here the VLX chart, which is the historical Bitcoin price. I am seeing weekly candles, and this is the bull run of 2013. That many YouTubers, many analysts are comparing that we are doing exactly what we did there. But I didn't really see some very good analysis of why the people say that. So I found a couple of things and I wanted to share that. On that bull run, the thing that happened is that we had like this double peak on the bull run. This looks small, but this was a 1,900 uptrend. So this started in January 2013, and in only 3 months we reached that peak. Then we have a 74% of retracement on the price. Then we have a consolidation period, and from there we did another very leg up to the upside. It was almost a 900%. So why I am saying that this is similar what we are doing right now, and I will explain that now. The first thing is that we have some market structure on the RSI there. Right now I am showing you the 3 indicators: the stochastic RSI, the RSI here, and the money flow index here. These 3 indicators mark tendencies of overbought and oversold on the market. So basically are momentum indicators also. And what I want to show you here is that on the first peak, let me put this a little more bigger. From the first peak we get a 74% correction there, and I will say that right now in the current one we did a 54%. So this already happened in this bull run. But let's see the RSI first. In the RSI we have this rectangle, this ring rectangle, which is our market structure. In the bull run that we have in 2011, we held this as support here and here before having the bull run of 2011. And then we broke the market structure here. And we have this downtrend from the market structure here. Then we held it as resistance, and from there we broke it again, created the lower high, and that was the end, right? That is what happened in 2011. In 2013, we came here creating support over here. This was our last support before the big bull run of 2013. And from there we create our first peak in April 2013. From there we broke to the downside, we have the downtrend. This was the 74% downtrend that I compared now with our 54%. And we broke the structure that we have created before. These are our market structure on the other side. We broke that structure and we created a lower high from that structure. And from there, we went all the way back up here. We tested that resistance, but we break it on the first attempt. And from there, we held it as support on all these touches. And there we created our last peak on the bull run, right? So basically what happened is that we lose our market structure on the other side, on the weekly chart. We created the lower high here, a lower low, sorry, from what we have here as support. We broke the trend there. We held it here at this point. This was at 47. And from the market structure to this low, this was 9 points on the other side. Yeah. So from 47 to 56 was. So these 9 points, we create a lower low here, and then we recover and we held it as support. And then we created the last all-time high for 2013, and from there it was all a downtrend. What happened with the market? We structured there on the other side. Then we hit it almost there as support. Here we have this peak, this correction, the cat bounce here that happened also in 2017 after the peak. And we broke again the structure. We held again, look here, exactly the same point of support here at the previous low. From there we went up and tested this as resistance. You can see here, right? We tested this as resistance here. And then we broke that structure again. And that was the end. Once we break this and created a lower low of here, of our previous support here, then that was the end. We came back here. We tested here all this situation here, again, the market structure as resistance. We couldn't create the higher high for this second peak, and that was the end. This was the all-time high of that bull run. And from there, it was all downtrend on the other side. And you can see the similar things on the money flow index. The money flow index moves very similar to the other side, but not exactly. So it's important also. So this is very important. These two market structures are very important on the bull run, on the weekly chart, because first we held the market structure as support, and in 2013 we break it down. We created the lower low from the market structure, and from there we recover it, we held it as support, and we had the new leg. Then that happened again here, but this time we didn't have this as support, and then this was all resistance, and from there was the end, right? So let me show you the current chart right now. This is where we are right now. So we have a 530% uptrend, and right now we have a 54% downtrend here, right? And look our market structure on the other side. This market structure actually is the same that we have here in January in the last bull run. You can see here that we held this all the support, then we have our peak, but we didn't have a double peak. We were directly broke the market structure on the other side. We held this as resistance after, resistance again, and that was the end, right? So right now we are using actually the same RSI structure that we have in 2017. You can see here how we created support here. This was the Corona dump in March 2020. That was our very low point here. From there we created higher highs. We generate again support on this trend line of the RSI. This is at 54. And from there we started to create higher highs. We held it as support again here, support here, and from there we were parabolic. from September 2020. You know what happened. We created an all-time high at $63,000 approximately. And from there, we are correcting already a 54%. And what happened with the structure? We also broke the structure again on the RSI, and we can here. Let me show you the RSI only. So this was our $63,000, and right now we held it. We broke this structure of support. We created a lower low here, and now the RSI is recovering. So what we need to see right now, and this is very important, in order to see if this bull run will continue, we need to see the RSI. We need to see if when the RSI continue going up right now, if we get into the 53, 54 points on the RSI, if we held it as resistance, that probably will mean that this is the end of the bull run. We will not continue. We will go back down here. Probably this will not be support anymore, and we will be going below the current low. So in order to we continue the second peak, we need to break again this as resistance without resistance. So basically we need to do something like this. Go here, this instead of act as resistance, we need to break it, held support here, and from here we can create our second peak. If we go from here, get it as resistance, and come back here, this probably will not be support anymore, and we probably will go down here. Or maybe we can try a second time and going down. The important thing is that we need to hold this rectangle at 53, 55. We need to hold it as support. This is everything. The RSI right now in Bitcoin is the most important indicator. This is showing us the same thing that happened before. And the same happened with the money flow index. Regarding the stochastic RSI, is working exactly as we had on 2013 also. We held our peak here, and from there we are correcting, and you can see right now that we have a lot of fake crosses. So right now we cross it again for the momentum, but you always need to wait if we are above the 20 on the other side, in the stochastic RSI. So because below that you can have a lot of fake crosses. So we already crossed again, but we need to wait and be up the 20 points on the stochastic RSI with the cross open, right? So that's what you need to see on the stochastic RSI. If we go to the previous bull run, like I say, the stochastic RSI did the same. So basically, I think we are right now here around this area on comparison with the previous bull run. The stochastic, you can see here that did also some fake outs here. And then we have a cross, and that was the cross that give us the next leg up. So I think in the stochastic RSI we are here. That also coincide with this broke of the structure on the RSI here. So I think we basically are at this point. Something that you need to see also is that when we get this downtrend, we didn't create a lower low after the bottom of the low. So that is also happening right now. That will mean that we don't need to create a lower low from this. It was around $29,000, almost $30,000. So right now we created the lower low here on the weekly chart for now. But if we create the lower low, if we go below 30, that will be very, very bearish for the chart, because that means that we are not doing the same than in 2013. Right now we are doing exactly the same in everything that I just showed you. So let's see another things. In 2013 we had two peaks. Right now we have one peak for now. I am waiting what happened with this, the RSI here, the stochastic RSI here. We need to go above 20 on the cross, and we need to broke again this trend of the market structure. We need to go above this. So if the RSI can support 55, I think that's great news, and we could have this scenario where we continue and create the second leg up. So moving into this, right? In this 2013 bull run, we have one peak of 1,900, then it's 74% down. And right now we are, this is not, there are no similarities between the ranges of how much we were up and how much we were down. But this is important that we only did a 54%, and that time we did a 74%, and the bull run continue. So that means that we can totally continue to the upside. After that, the down after the first peak broke the RSI structure for 9 points. That was exactly the same that happened here in 2021. On the other side, from the market structure here, we broke 9 points exactly. So from here to here, there are 9 points in the other side. That is the same that happened on the previous one, from here to here, right? So that is very, very important. Sorry, not here, from here to here. This was the end of the bull run 2013. From here to here, we have 9 points on the other side on the weekly chart, and the same is happening right now, 9 points. So that's a very big similarity. Then, from the top of our fifth peak, passed 210 days to reach it again. What that is mean that is that here, here is the ruler. We have our top here, and to get the same level here, pass it 210 days. You can see it here. 210 days to reach the high of the peak again, and from there we were parabolic, right? So if we consider the same amount of days from our peak, that means that our peak was here, the 14th of April, that will put us 210 days, that will put us at 8th of November, right? So if we do exactly the same, remember, could be some days of difference here, but if we do exactly the same that the 2013, by the 8th of November, we will be hitting $63,000 according to that. So according to that, we will be doing some consolidation here, and in the 10th of November, October, November here. Around this, we will be at $63,000 again. So we probably have this time of consolidation, something similar to this. That will be one possible scenario if we do exactly the same. And once we reach our first peak, it took us 21 days to reach the all-time high. So that what it means is that once we reach that, we only had 3 weeks, and that was all the 900% that we hit. So if we were 3 weeks from here, that will put us at the end of November, right? The 29th of November, first day of December. So from here, we only had 3 weeks more, and we will be reaching our peak. That will be, but around here, around this date. Around this date, that will be our next peak of the bull run, on the end of 2021. Of course, if we do a 900%, that will put us from there, that will put us around $200,000, but I don't think we will do a 900% from $60,000, but I think we could hit $100,000. So what all this means? This means that in terms of the big picture, we are still in the bull run, and we are still probably doing the same that we did in 2013. Remember, each bull run, it will be different, but for sure they will rhyme. So I really think that we are experiencing something similar that we have here right now. If we don't break the structure on the other side here, if we held it as resistance and come back here and lose the support that we created here, then that will mean that we are in the end of the bull run. And we will not have the leg up, and probably we will have more consolidation between $10,000 and $20,000. Moving here, stochastic RSI looks similar on the first peak. on both bull runs. Money flow index plays similar to the weekly RSI in all aspects. That happened also in the current bull run. We didn't create a lower low after a downtrend, and that is happening right now. We didn't create a lower low from here, and that was the same in 2013. And the 2011 bull run had the same RSI fractal of 2013. That is what I showed you at the beginning, right? So here, let me zoom a little bit here. This was our bull run on 2011. Sometimes our YouTubers or analysts that didn't consider this a bull run, but this was a very big uptrend. And we did the same with the RSI. We have here the market structure of the RSI. After that, we broke that, we held it as resistance, and we went down. That was the end. So this is what I am looking right now on our chart on 2021. We are going up right now in our RSI. We need to break the market structure and hold it as support to have a new leg up. But if we hold it as resistance and go down, probably we will break here, and that will mean that we are at the end of the bull run. So something like happened here, right? If you can see here, we didn't have resistance. We recovery, we held it as support here, and there we create our second leg up. But if we held it as resistance, if we don't pass it, that will mean that, and that is the end of the bull run. And for me, it's also the end of the bull run if we create a lower low here on the RSI. That will be very, very bearish. And that happened here. So that is mainly the comparisons. Another thing that I want to show you, something that it's a little concern for me. I like this indicator. This is the William Alligator. I will not explain exactly how it works right now, but there is 3 lines show momentum on the trend and are related to the Fibonacci extensions also. But if we go to our previous 2013 bull run, here when we were on our first peak, let me show you this. When we were on our first peak, the downtrend was 74%, but you can see how the alligator, the blue line, held it as support here, and from there we also created the new leg up, the second leg up. But we didn't broke the alligator. And during the bull runs, the alligator is always bullish. But right now, that is not what is happening right now. Let me show you that in the current chart. Right now, we already broke it, the blue line of the alligator. So in order for me to change this trend, we need to hold it as support, so that will be also part. Right now is above $40,000. And in the previous first peak that we have, we also didn't break the blue line of the alligator with the green one with the blue one. So that is also bearish. That is something that I am concerned right now. I want that we held the blue line of the alligator as support, and we turn this green line bullish. That is the major concern that I have right now. You can see in 2013, on their second peak, what will happen is that we didn't hold support on the alligator. You can see here, we break down, and all the alligator turn bearish here. This is more similar what is happening right now. So that is why also I am also waiting the RSI what it's doing. If we didn't pass our structure and we go and we break it, the current low, that will mean that the bull run is over. So things to watch right now. The weekly RSI below 43 is probably the end of the bull run, and we will not have the second peak. Resistance on the way up on the RSI, broken structure, is probably the end of the bull run. That is what I mentioned here. If we held resistance of our previous RSI structure, that will mean that it's the end. We need to hold this as support again as soon as possible. We need to recover the alligator indicator as support as soon as possible too. If we break 30k on daily candle close, that is very bearish, because that will mean if we do it in the weekly candle is worse. So if we close below our previous high here, so if we close a weekly candle below this line, that is very bearish, because that means we created a lower low from the downtrend, and that didn't happen in 2013. So that will be bad news. Also, the false hash ribbon signal in the daily candle is very bearish. We are waiting the ribbons again, and we should have not a lower low right now on 30k. So that is what I am showing. Right now we are between 30 and 40k from a long time. It's very boring. I did a couple of trades, but it's very boring. So for summarize, we need to break 40k and be above that. That will give us support on the alligator, and that will do the RSI to try to test again the structure that is break right now. That will be it. If we held this as a support and held the alligator as support, we probably will have our second leg up to the thousands of dollars on Bitcoin, $100,000 on Bitcoin or more. But if we didn't recover the alligator, and if we didn't recover this support, you can see here how was support on all the Bullrun, right? You can see it here. And now we broke that. So we need to recover it at support. Those are the things that you need to watch now in weekly candles. Anything else will happen between $30,000 and $40,000. I don't care. I don't care, because it's just consolidation. We probably could be doing that. If we have the scenario of 2013, we will be consolidating until November. In November, we will be at our last all-time high. So probably we will have more weeks of consolidation if this happens. The timing could be different, but probably will rhyme. Remember that. Well guys, that is all for this video. I hope you enjoyed. This is something that I didn't see in any YouTuber, in any analyst. I didn't see any fractal comparison between the two bull runs on the RSI, which is the most important indicator right now. So I hope you enjoyed that, and if you consider that this analysis has value, please share in your social media. Help me to grow the channel, because this information I think is very important to many people, so you can be level-headed and you will be not worried and not stressful of what happened in the market on the day, on the 1 hour chart, 4 hour chart, 30-minute chart. That doesn't matter on these bull runs or bear market structures. So please, before you leave, like the video, subscribe to the channel, click the bell to get the notifications. Remember to share this with many people that you can. And if you didn't saw these other videos, please watch it. These are very great quality content. And please subscribe to the channel if it's your first time. I will see you in the next video. Bye.